Hey, welcome to Accounting in Focus. In this video, we're going to answer the question, what is a transaction? All right, so a transaction is, drum roll please, it's a trade. So it's when something's received and something else is traded in return. It is always two-sided. Okay, it has to be two-sided. And if you've already watched my videos about the accounting equation, you know that the reason it has to be two-sided is because if it's not, your accounting equation does not stay in balance. Okay, but it's not always obvious though, so you need to be careful. Okay, and we're going to look at 3 examples. Okay, so the first example, the company purchases a desk with cash for $500. All right, so let's think about this. What are they receiving? They're receiving a desk, right? That's pretty easy. What are they giving up? They're giving up cash. So yes, we have a transaction. Woohoo! Okay, so that one's pretty easy, right? That was pretty simple. Receives a desk, gives up cash, transaction. Boom. Okay, let's look at number 2. The company purchases a car with no money down. Okay, so what is the company receiving? All right, well, the company is receiving a car. Okay, what is the company giving up? Well, let's see, they're not putting any cash down. So what are they giving up? Okay, so you have to sometimes think that it's not only about what we're giving up today, but it's about what we're giving up in the future. So we're not giving up cash today, but we are giving up future cash, right? In the form of a loan. So now the company has an obligation, right? Which we call a liability, right? So when you purchase a car, you don't put any money down, you now have a loan, right? And a loan is a liability. So yes, that is also a transaction. Okay, let's look at number 3. So for number 3, the company signs a contract to have renovations on an office building. No deposit is required at this time. Okay, so what is the company receiving? All right, well, they signed a contract, right? Okay, but signing a contract doesn't create an exchange, right? So basically, they may have an obligation to us to do the work, but we didn't pay them anything, so there's no value on that, right? So we don't really have a value of what, basically it's saying, okay, if you do some work, I'll give you some money. Well, if you don't do the work, I don't give you any money. So, okay, let's see. What are we giving up? Let's see if we can name that. Well, we're promising to pay you if you do work for us. I'm not seeing an exchange here. No transaction. Okay. Can you kind of see the difference? Okay. So in example 1, it was really easy to see what the exchange was. In example 2, it was, it was a little bit harder to see what we gave up. And in number 3, we didn't receive anything yet. We didn't give anything up yet. No transaction in example 3. Okay, so what I'd love to see is I'd love for you guys to try to come up with more examples that are not transactions, because I think sometimes this one is really, really hard, but we see these quite a bit in business. So let me know of other examples that you can think of that are not transactions. All right, guys, thanks so much. I will see you soon.